Question 1. What is a primary benefit trigger for long-term care insurance policies? A. Being unable to perform two or more activities of daily living adults. B. Having a diagnosed cognitive impairment. C. Reaching a certain age. D. Submitting a claim for services not covered under the policy. Answer A. Being unable to perform two or more activities of daily living adults. Explanation. A primary benefit trigger for long-term care LTC insurance is typically the inability to perform two or more activities of daily living adults. A DLS include essential functions such as bathing, dressing, eating, toileting, transferring, and maintaining continence. Insurers use these criteria to determine when benefits become payable under the policy, while cognitive impairment, option B, can also be a trigger for benefits. The specific inability to perform a DLS is more commonly recognized as the primary trigger. Reaching a certain age, option C, does not itself qualify for benefits, and option D is incorrect as claims should be for covered services. Question 2. In Rhode Island, what is a requirement for insurers offering long-term care insurance? A. They must provide unlimited coverage options for all policyholders. B. They must submit their rate changes for approval to the state before implementation. C. They must offer policies that do not include any exclusions or limitations. D. They must allow policyholders to renew their coverage without any premium increases. Answer. B. They must submit their rate changes for approval to the state before implementation. Explanation. In Rhode Island, long-term care insurers are required to submit their proposed rate changes to the state for approval. This regulation is intended to protect consumers from sudden and unsubstantiated premium increases that could make it unaffordable for them to maintain their coverage. Options and C are incorrect, as insurers are not mandated to provide unlimited coverage or to eliminate exclusions entirely. Option D is also incorrect, while insurers may allow renewals. Premium increases can occur based on state regulations and underwriting guidelines. Question 3, scenario-based. Mr. Smith, a 72-year-old retiree in Rhode Island, has recently been diagnosed with early-stage Alzheimer's disease. He is considering purchasing a long-term care insurance policy to help cover potential future needs. What should Mr. Smith prioritize when selecting a policy? A. The lowest premium available regardless of coverage details. B. A policy that includes comprehensive coverage for home care services and inflation protection. C. A policy that only covers facility-based care as he plans to move to an assisted living facility. D. A policy that requires no waiting period before benefits begin, even if it offers limited coverage. Answer. B. A policy that includes comprehensive coverage for home care services and inflation protection. Explanation. Mr. Smith should prioritize a policy that offers comprehensive coverage for home care services along with inflation protection. Given his diagnosis of Alzheimer's disease, it's critical to have coverage that includes home care services, as many individuals prefer to receive care in their homes. Additionally, inflation protection is essential because long-term care costs can rise significantly over time. Option is not advisable, as selecting a policy solely based on the lowest premium may lead to inadequate coverage. Option C is limiting and does not account for the possibility that he may wish to stay at home longer. Option D, while it seems beneficial to have no waiting period, may come with trade-offs in coverage quality or increased costs, making it a less prudent choice overall. Question 4. Which of the following factors is NOT typically considered when determining the premium for a long-term care insurance policy? A. The applicant's age at the time of application. B. The applicant's health history. C. The current economic conditions in the state. D. The type of benefit selected in the policy. Answer. C. The current economic conditions in the state. Explanation. Premiums for long-term care insurance are primarily influenced by factors such as the applicant's age at the time of application, option A, health history, option B, and the type of benefit selected, option D. Insurers assess the likelihood of future claims based on these factors. While economic conditions can indirectly influence rates, they are not a direct factor in determining an individual's premium. Insurers are more focused on personal risk factors than on broader economic trends. Question 5. What is a common exclusion found in many long-term care insurance policies? A. Care received outside of the United States. B. Care for chronic conditions like diabetes. C. Care for individuals over the age of 85. D. Home health care services. Answer A. Care received outside of the United States. Explanation. Many long-term care insurance policies include exclusions for care received outside of the United States. This is because insurance companies often limit coverage to services rendered domestically to avoid complications with international laws and healthcare systems. Options B and D are incorrect because chronic conditions and home health care services are typically covered provided they meet the policy criteria. Option C is also incorrect, as age alone does not exclude individuals from coverage. It depends on the policy terms and conditions. Question 6, scenario-based. Mrs. Johnson, a 65-year-old widow in Rhode Island, is exploring her options for long-term care insurance. She currently has a chronic condition that requires regular medical attention. During her research, she finds two policies. Policy A has a higher premium but offers extensive home care benefits and inflation protection, while Policy B has a low premium but excludes home care and has no inflation protection. What should Mrs. Johnson consider most important in her decision-making process? A. The immediate cost savings of Policy B. B. The long-term financial implications of needing home care as her condition progresses. C. The policy that offers the most marketing perks. D. The insurer's reputation based solely on advertising. Answer: B. The long-term financial implications of needing home care as her condition progresses. Explanation: Mrs. Johnson should prioritize the long-term financial implications of her care needs when selecting a policy. Given her chronic condition, she may require home care in the future, making it crucial to choose a policy that covers these services and includes inflation protection. While the immediate cost savings of Policy B may seem appealing, it could lead to significant out-of-pocket expenses later on if she needs home care. Option C is misleading, as marketing perks do not reflect the quality or comprehensiveness of the coverage. Option D is also incorrect. While the insurer's reputation matters, it should not be based solely on advertising but rather on performance and customer service reviews. Question 7. Which of the following statements about the Long-Term Care Partnership Program in Rhode Island is true? A. It allows individuals to purchase long-term care insurance without any asset protection benefits. B. It provides a way for individuals to protect some of their assets while still qualifying for Medicaid. C. It is a state program that covers all long-term care costs without the need for private insurance. D. It mandates that all long-term care insurance policies must be sold as a part of the program. Answer: B. It provides a way for individuals to protect some of their assets while still qualifying for Medicaid. Explanation: The Long-Term Care Partnership Program in Rhode Island is designed to help individuals protect some of their assets while still qualifying for Medicaid after utilizing their private long-term care insurance benefits. Under this program, the amount of assets protected corresponds to the amount of insurance benefits paid out. Option is incorrect because the program explicitly offers asset protection benefits. Option C is misleading, and the program does not cover all long-term care costs but works in conjunction with private insurance. Option D is also incorrect. While the program encourages the sale of qualified policies, it does not mandate that all policies must be sold as part of it. Question 8. What is the purpose of an elimination period in a long-term care insurance policy? A. To allow the insurer to delay payments indefinitely. B. To define the time between policy issuance and the start of premium payments. C. To establish a waiting period before benefits become payable. D. To limit the total duration of coverage for the insured individual. Answer: C. To establish a waiting period before benefits become payable. Explanation: The elimination period in a long-term care insurance policy serves as a waiting period that must pass before benefits are paid. It functions similarly to a deductible. During this time, the policyholder must pay for their care out of pocket. The length of the elimination period can vary, and policyholders should choose a duration that aligns with their financial situation and care needs. Option A is incorrect, as elimination periods are not designed to allow indefinite delays in payment. Option B misrepresents the purpose of the elimination period, while Option D incorrectly suggests that it limits total coverage duration. Question 9. What role do activities of daily living adults play in long-term care insurance? A. They are only used to assess eligibility for disability benefits. B. They determine the level of care provided by hospitals and medical facilities. C. They are used to establish benefit triggers in long-term care insurance policies. D. They are irrelevant to long-term care planning and insurance. Answer: C. They are used to establish benefit triggers in long-term care insurance policies. Explanation: Activities of daily living adults are crucial in establishing benefit triggers for long-term care insurance policies. Insurers typically require that policyholders be unable to perform a specified number of a DLS, commonly 2 or more, before benefits are triggered. This ensures that individuals who need assistance with daily living tasks can access their insurance benefits. Option A is incorrect, as a DLS are not limited to disability benefits. Option B mischaracterizes the role of adults, as they do not directly determine care levels in hospitals. Option D is also inaccurate, as a DLS are a fundamental concept in long-term care insurance and planning. Question 10. Which of the following is an advantage of hybrid long-term care insurance policies? A. They guarantee unlimited long-term care benefits without any exclusions. B. They combine long-term care benefits with life insurance or annuity features. C. They typically have low premiums than traditional long-term care policies. D. They require no medical underwriting for approval. Answer. B. They combine long-term care benefits with life insurance or annuity features. Explanation. Hybrid long-term care insurance policies offer a unique advantage by combining long-term care benefits with features of life insurance or annuities. This structure provides policyholders with the potential for a death benefit if long-term care is not needed. Option A is incorrect, as hybrid policies may have limitations or exclusions. Option C is misleading because hybrid policies often have higher premiums due to the added benefits. Option D is also false, as most hybrid policies still require some level of medical underwriting. Question 11. What is the primary purpose of the Long-Term Care Insurance Model Act established by the National Association of Insurance Commissioners, NAICE, to eliminate all forms of long-term care insurance? B. To standardize long-term care insurance products and protect consumers. C. To mandate that all states adopt identical premium rates for long-term care insurance. D. To create a federal long-term care insurance program for all citizens. Answer. B. To standardize long-term care insurance products and protect consumers. Explanation. The primary purpose of the Long-Term Care Insurance Model Act is to create standardized guidelines for long-term care insurance products, thereby enhancing consumer protection. The Model Act seeks to ensure clarity in policy terms, prevent misleading practices, and establish minimum standards for coverage. Option is incorrect, as the Act aims to promote, not eliminate, insurance products. Option C is misleading, since the Act does not enforce uniform premium rates across states. Option D is also incorrect, as it does not establish a federal insurance program. Question 12. When assessing long-term care insurance policies, what does inflation protection typically refer to? A. Coverage for inflation-related economic losses. B. A mechanism that increases policy benefits over time to keep pace with rising costs of care. C. A requirement for all policies to offer guaranteed renewability. D. An exclusion for services related to inflationary pressures. Answer. B. A mechanism that increases policy benefits over time to keep pace with rising costs of care. Explanation. Inflation protection in long-term care insurance policies refers to a provision that allows benefits to increase over time to match the rising costs of care due to inflation. This feature is crucial, as it helps ensure that the policyholder's coverage remains adequate in the future. Option A misrepresents the term's meaning. Option C is incorrect, as guaranteed renewability is a separate provision. Option D is also inaccurate, as inflation protection aims to enhance coverage, not exclude it. Question 13, scenario-based. Mr. Taylor, a 70-year-old resident of Rhode Island, has been considering long-term care insurance but is concerned about the potential for rising premiums over time. He is currently in good health. What strategies can Mr. Taylor employ to mitigate the impact of future premium increases? A. Select a policy with a longer elimination period to lower initial premiums. B. Choose a policy with fixed premiums that will not increase over time. C. Purchase a policy with built-in inflation protection. D. Ignore premium increases and plan to pay out of pocket for care. Answer. C. Purchase a policy with built-in inflation protection. Explanation. Mr. Taylor can mitigate the impact of future premium increases by purchasing a policy that includes built-in inflation protection, which ensures that his benefits will increase over time and keep pace with the rising costs of care. Option A, while it may lower initial premiums, does not address long-term costs. Option B is often not available, as most policies will have some level of rate adjustment over time. Option D is not advisable, as paying out of pocket could lead to significant financial strain in the future. Question 14. Which of the following accurately describes the claims review process for long-term care insurance? A. Insurers are required to pay claims immediately upon submission. B. A claims review process may involve verification of the insured's health status and eligibility criteria. C. Claims can only be reviewed during the first year of coverage. D. Insurers have no obligation to provide a written response to denied claims. Answer: B. The claims review process may involve verification of the insured's health status and eligibility criteria. Explanation: during the claims review process, insurers typically verify the insured's health status and eligibility criteria to determine if the claim meets the policy requirements. This process is essential to ensure that benefits are paid only for covered services. Option is incorrect, as insurers may have specific timelines for processing claims. Option C is false. Claims can be reviewed at any time the policy is in force. Option D is also incorrect, as insurers are usually required to provide written notice of claim denials along with the reasons for denial. Question 15. What is a primary reason that individuals purchase long-term care insurance? A. To receive tax deductions for premiums paid. B. To avoid potential out-of-pocket expenses associated with long-term care services. C. To gain guaranteed acceptance into assisted living facilities. D. To have access to unlimited home health care services. Answer: B. To avoid potential out-of-pocket expenses associated with long-term care services. Explanation: individuals primarily purchase long-term care insurance to protect themselves against the high out-of-pocket expenses associated with long-term care services. These services can be financially burdensome, and insurance helps mitigate those costs. Option is misleading, as tax deductions for premiums may not be available in all situations. Option C is incorrect, because having insurance does not guarantee acceptance into facilities. Option D is also false, as most policies will have limits on home health care services. Question 16. In Rhode Island, what information must be disclosed to potential long-term care insurance policyholders? A. The insurer's financial performance over the last decade. B. The potential for premium increases and the basis for those increases. C. The personal health information of other policyholders. D. The specific cost of services in all local facilities. Answer: B. The potential for premium increases and the basis for those increases. Explanation: in Rhode Island, insurers are required to disclose the potential for premium increases and the rationale behind those increases. This transparency allows consumers to make informed decisions about their coverage options. Option is incorrect, as financial performance is not typically required disclosure. Option C is a violation of privacy regulations, and personal health information of other policyholders cannot be disclosed. Option D is also inaccurate, as insurers are not obligated to provide specific costs of services in local facilities. Question 17. Which of the following is a characteristic of traditional long-term care insurance policies? A. They always include coverage for assisted living facilities. B. They do not offer any death benefits if the insured does not use the policy. C. They are more likely to have lower initial premiums than hybrid policies. D. They automatically renew every year without the need for reapplication. Answer: B. They do not offer any death benefits if the insured does not use the policy. Explanation: traditional long-term care insurance policies typically do not provide death benefits if the insured does not use the benefits. There is no payout to beneficiaries. This is in contrast to hybrid policies, which often combine long-term care with life insurance benefits. Option A is incorrect, because traditional policies may not cover assisted living depending on the terms. Option C is misleading, as traditional policies may or may not have low premiums compared to hybrid options. Option D is false. A renewal is generally subject to underwriting conditions and may not be automatic. Question 18. What criteria must be met for an individual to qualify for Medicaid after utilizing long-term care insurance benefits in Rhode Island? A. The individual must have private insurance with no exclusions. B. The individual must exhaust their long-term care insurance benefits before applying for Medicaid. C. The individual must be below a certain age limit. D. The individual must have a minimum number of home care hours per week. Answer: B. The individual must exhaust their long-term care insurance benefits before applying for Medicaid. Explanation: to qualify for Medicaid after using long-term care insurance benefits, individuals must typically exhaust their private insurance benefits. The long-term care partnership program allows for asset protection corresponding to the amount of benefits used, thus facilitating Medicaid eligibility. Option is incorrect, as having no exclusions is not a requirement. Option C is misleading since age is not the primary factor for Medicaid eligibility in this context. Option D is false, so there are no specific minimum home care hours required. Question 19. What is the significance of guaranteed renewability in long-term care insurance policies? A. It guarantees the insurer will not change the coverage terms regardless of the policyholder's health. B. It ensures that the policyholder can renew their coverage without evidence of insurability. C. It mandates that premiums will never increase for the life of the policy. D. It allows policyholders to renew only at the end of the policy term without additional underwriting. Answer. B. It ensures that the policyholder can renew their coverage without evidence of insurability. Explanation. Guaranteed renewability is a critical feature of long-term care insurance policies, allowing policyholders to renew their coverage without needing to prove they are still insurable regardless of changes in their health status. This provision protects individuals from being denied renewal or facing higher premiums due to deteriorating health. Option is misleading because while the terms of the policy cannot be changed unilaterally by the insurer at renewal, the insurer could adjust premium rates in line with state regulations. Option C is incorrect. Guaranteed renewability does not prevent premium increases, but it does assure that the policy can be renewed regardless of health changes. Option D is false, as guaranteed renewability allows for continuous renewal without undergoing new underwriting at each renewal period. Question 20. What role does the activities of daily living adults play in determining eligibility for long-term care insurance benefits? A. They are the only criteria for determining eligibility and must be fulfilled in all cases. B. They are guidelines used to assess an individual's level of independence and need for assistance. C. They are not considered in the eligibility assessment for long-term care insurance. D. They are solely based on the recommendations of family members or caregivers. Answer. B. They are guidelines used to assess an individual's level of independence and need for assistance. Explanation. Activities of daily living adults are fundamental activities that individuals must be able to perform independently to qualify for long-term care insurance benefits. These typically include bathing, dressing, eating, toileting, transferring, moving in and out of bed, or a chair, and continence. Insurers use these guidelines to assess an individual's functional ability and determine the need for long-term care services. Option is incorrect. While a DLA are a major factor, insurers may also consider cognitive impairment and other criteria. Option C is false. A DLS are a crucial part of the eligibility assessment for long-term care insurance. Option D is misleading, as eligibility is based on clinical assessments rather than solely family or caregiver recommendations. Question 21. In Rhode Island, what is the purpose of the long-term care partnership program? A. To provide free long-term care services to all residents over 65. B. To encourage the purchase of long-term care insurance by allowing asset protection when benefits are utilized. C. To regulate long-term care facilities and their service quality. D. To create a state-funded program for long-term care benefits without insurance. Answer. B. To encourage the purchase of long-term care insurance by allowing asset protection when benefits are utilized. Explanation. The Long-Term Care Partnership Program in Rhode Island is designed to promote the purchase of private long-term care insurance by allowing individuals to protect a portion of their assets if they exhaust their insurance benefits and subsequently apply for Medicaid. This program facilitates access to care while safeguarding individuals' financial resources. Option A is incorrect because the program does not provide free services. It focuses on insurance. Option C is misleading, as the program does not primarily regulate facilities, but rather provides incentives for insurance. Option D is false, as the program is centered on insurance solutions rather than state-funded care. Question 22. What is a common exclusion found in many long-term care insurance policies? A. Care provided by a licensed healthcare professional. B. Services received in a hospital or nursing facility. C. Care for a pre-existing condition during the first year of coverage. D. Support for activities of daily living. Answer. C. Care for a pre-existing condition during the first year of coverage. Explanation. Many long-term care insurance policies include exclusions for care related to pre-existing conditions within a specified time frame, often the first year of coverage. This means that if an individual requires long-term care services for a condition that existed prior to obtaining the insurance, those services may not be covered. Option A is incorrect, as care from licensed professionals is typically covered. Option B is misleading, as services in facilities are generally covered unless they relate to specific exclusions. Option D is false, as support for ADLS is the primary purpose of long-term care insurance, not excluded from coverage. Question 23. Which of the following best describes the relationship between long-term care insurance premiums and age? A. Premiums decrease as individuals get older. B. Premiums are typically lower for older applicants due to experience with aging. C. Premiums generally increase with age due to a higher risk associated with older applicants. D. Age has no impact on long-term care insurance premiums. Answer: C. Premiums generally increase with age due to higher risk associated with older applicants. Explanation: as individuals age, they are perceived to have a higher risk of needing long-term care services, which often results in higher premiums for long-term care insurance. Insurers consider age as a critical factor in determining the likelihood of future claims when setting premium rates. Option A is incorrect. Premiums do not decrease with age. Option B is misleading because premiums are usually higher for older applicants, reflecting the increased risk. Option D is false. Age is a significant factor in premium calculations. Question 24. What type of long-term care insurance policy typically requires higher premiums but offers more extensive benefits? A. Short-term care insurance. B. Traditional long-term care insurance. C. High-deductible long-term care insurance. D. Annuities with long-term care benefits. Answer: B. Traditional long-term care insurance. Explanation: traditional long-term care insurance policies usually require higher premiums compared to short-term care insurance because they offer more comprehensive and extensive benefits for longer periods of care. These policies are designed to cover a wider array of services and have fewer limitations. Option A is incorrect, as short-term care insurance usually provides limited benefits for a shorter duration, resulting in low premiums. Option C is misleading. High-deductible policies often have low premiums, but come with significant out-of-pocket expenses before benefits kick in. Option D can be variable in terms of cost, but it may not necessarily provide more extensive benefits than traditional policies. Question 25. What is the primary focus of consumer protections mandated by Rhode Island's long-term care insurance regulations? A. To reduce the cost of long-term care insurance premiums for all applicants. B. To ensure clear communication of policy terms and prevent misleading practices. C. To require all insurers to offer identical policy options. D. To eliminate the need for medical underwriting in policy approvals. Answer: B. To ensure clear communication of policy terms and prevent misleading practices. Explanation: Rhode Island's long-term care insurance regulations prioritize consumer protections by mandating that insurers clearly communicate policy terms and conditions to prevent deceptive practices. This transparency helps consumers make informed decisions about their coverage options. Option is incorrect. While regulations aim to protect consumers, they do not directly reduce costs. Option C is misleading. Insurers have the flexibility to offer various policy options. Option D is false. Medical underwriting is often necessary to assess eligibility and risk. These questions and explanations should help your students prepare effectively for the Rhode Island long-term care insurance exam by emphasizing critical concepts and practical understanding of the relevant laws and regulations. Question 26. In Rhode Island, what must insurers provide to consumers before the purchase of a long-term care insurance policy? A. A summary of benefits and coverage along with the final policy terms. B. A binding agreement that premiums will never increase. C. An endorsement allowing for immediate coverage upon payment of the first premium. D. A mandatory waiting period before any coverage begins. Answer A. A summary of benefits and coverage along with the final policy terms. Explanation: before purchasing a long-term care insurance policy in Rhode Island, insurers are required to provide consumers with a clear summary of benefits and coverage, ensuring that potential policyholders understand what is included and any limitations or exclusions. This transparency is essential for informed decision-making. Option B is incorrect because insurers cannot guarantee that premiums will never increase. Premium adjustments can occur based on state regulations and other factors. Option C is misleading. Coverage does not typically begin immediately unless specified in the policy, and there are often waiting periods involved. Option D is false. While some policies may have waiting periods for certain benefits, this is not a mandatory requirement before coverage starts. Question 27. How does the inflation protection option in long-term care insurance policies function? A. It guarantees that premiums will not increase as the policyholder ages. B. It increases the benefit amount over time to keep pace with inflation. C. It allows policyholders to withdraw funds from their policy without penalties. D. It provides an additional benefit only if the policyholder is in a facility for more than 30 days. Answer: B. It increases the benefit amount over time to keep pace with inflation. Explanation: the inflation protection option in long-term care insurance policies is designed to adjust the benefit amounts over time, ensuring that the coverage remains adequate as the cost of care increases due to inflation. This feature helps protect policyholders from the risk of underinsurance as healthcare costs rise. Option is incorrect. Inflation protection does not prevent premium increases, but focuses on benefit adjustments. Option C is misleading. The inflation protection option does not typically involve fund withdrawals without penalties. Option D is false. Inflation protection is related to benefit amounts rather than specific conditions related to facility stays. Question 28. What is the purpose of the elimination period in a long-term care insurance policy? A. To delay the start of coverage while the policyholder pays lower premiums. B. To set a period during which the policyholder must cover their own care costs before benefits begin. C. To provide a grace period for the policyholder to cancel the policy without penalty. D. To allow insurers to determine the eligibility of the policyholder for benefits. Answer: B. To set a period during which the policyholder must cover their own care costs before benefits begin. Explanation: the elimination period, also known as the waiting period, is a specified duration during which the policyholder is responsible for paying for their long-term care before the insurance benefits kick in. This period is crucial for insurers to manage risk and costs while providing a framework for when benefits will be available. Option A is incorrect. While it may lead to low premiums, the elimination period specifically pertains to when benefits are accessed, not premium payments. Option C is misleading. While some policies may have a grace period for premium payments, this is separate from the elimination period. Option D is false. The elimination period relates to benefit access, not to determining eligibility. Question 29. Which of the following statements accurately reflects the claims process for long-term care insurance? A. Claims are automatically approved without any documentation. B. The policyholder must submit a claim within 30 days of receiving care. C. Insurers are required to provide a clear explanation of any claim denial. D. Claims can be paid directly to the policyholder only. Answer: C. Insurers are required to provide a clear explanation of any claim denial. Explanation: insurers must give policyholders a clear and comprehensive explanation if a claim for long-term care benefits is denied. This requirement ensures transparency in the claims process and allows policyholders to understand the reasons for denial, which is essential for potentially appealing the decision. Option A is incorrect. Documentation is typically required to support claims. Option B is misleading. While timely submission of claims is encouraged, specific time frames can vary by policy and state regulations. Option D is false. Claims may be paid directly to healthcare providers depending on the policy's terms and arrangements. Question 30. Mr. Smith has recently purchased a long-term care insurance policy. He is concerned about how to ensure that his benefits will keep up with rising care costs in the future. What option should he consider? A. Select a policy with a high elimination period. B. Choose a policy that includes inflation protection. C. Opt for a traditional policy without riders. D. Focus solely on the lowest premium available. Answer: B. Choose a policy that includes inflation protection. Explanation: Mr. Smith should consider a policy that includes inflation protection to ensure that his long-term care benefits will increase over time, keeping pace with rising healthcare costs. This option is critical in maintaining adequate coverage as the costs of long-term care services tend to rise with inflation. Option is incorrect. A high elimination period would delay benefit access and does not address future cost increases. Option C is misleading, and traditional policies without riders may lack important features like inflation protection. Option D is false. While cost is important, focusing solely on the lowest premium can lead to inadequate coverage in the long term.